I know it's a lot of steps. I do not make you do this on the final, so don't worry about that, okay? It's the homework that where you got the big problem there. But we just went through it. I think those are the only two as well on the reserve ratio. All right, let's see. Now, what we need to do, so I want to show you as well the what the Iowa form looks like. I thought I had it up here. No. Shoot. It's 2014. No. Oh, I had it. There we go. Okay, so this is what Iowa Workforce Development is, the state agency that oversees the unemployment tax system in the state of Iowa. Each state, again, has its own. These reports are done on a quarterly basis, just like the 941. So if you were preparing your quarterly reports for federal purposes, you at the same time you would be preparing these reports. Now you'll see the due dates: April 30th, July 31st, October 31st, January 31st. So the end of the month following the quarter end. So just like that 941, nice that they're on that same schedule. So up here, if you were filling this out, I wouldn't use this. This is all done online. Now, I don't know that any, when you have a company, you will apply for an unemployment account, and then you get a login, and then you go into their system and fill everything out manually. There are even ways when you have, hundreds of employees, it can be really cumbersome, so there are ways to upload that information based upon the software that you are using within your company. All of the identifying information about the company up at the top. I'm going to come back to this first page here because I want to start actually on the second page. So you'll see that all of the wage information for each individual employee is going to be listed on this form. So even though this is just one page, it could be hundreds of pages, right? Depending upon how many employees there are. So Social Security number, employee's name, total wages paid, so even if they're over the $34,800, and then the taxable wages paid. So this is why, so every quarter this has to be tracked. How much has been applied toward their taxable wages? You've got to look at the previous quarter to see how much has been applied. Well, actually you have to look at all of the quarters to see how much has been applied year to date. So that is a running total. Then there is, and these are the amounts per quarter here, not per year. And then we've got the totals down here for all of the employees. There are also some questions here about how many employees worked, and the state gathers this information for statistical purposes and to see what the employment data looks like. So number of employees who worked or received pay for the pay period that includes the 12th of the month. Remember, we had a kind of a similar question on that 941, but they were only looking for one particular date during the quarter. This one, they're wanting a date for each of the months during that quarter. How many employees were working? And then some specific questions about amount of pay that exceeds regular and recurring payments, such as bonuses, executive pay, so something out of the ordinary, right? Not just regular salaries, and again, that's just gathering statistical information. The reason why, if the number of workers increased or decreased during the quarter, why did that happen? Like, is there a particular reason why that happened? Were there layoffs? Is it a seasonal change? So it's just like summer employment, and so they go down in one of those months. All of the this information then is transferred, or the totals anyway, are transferred over to the first page. It says here, so total wages for total of all wages on all pages, and then the taxable wages. the experience rate would be over here, and normally this is already predetermined, right? It's the employer is going to know what that amount is. And then there's some questions about the reserve fund as well. Again, those are numbers that would be calculated by the state on the pre-printed forms and would be already included on the website. And then all of the calculations below. If there is an amount, if it's late, then there may be interest that's owed, there may be a penalty for late payment. So the contribution that's owed, plus any interest and penalties for the total amount. If there was any previous credit that was due, that can be applied as well. And then the final calculation of the amount paid. Again, you don't have to know this form in detail. I just wanted to introduce it to you so you can see what the Iowa form looks like. Okay. Like I said, each state is going to have their own setup there. A couple other things here that we want to talk about with regard to SUTA. So, an employer will remain liable for 2 years, and by that it means that if there's any amount that's in dispute, so kind of a statute of limitations of 2 years, and in order to terminate that liability, the employer has to file an application with the state. Non-profit organizations at the federal level anyway have the option to reimburse the state for the actual amount of unemployment benefits that were paid rather than paying a percentage. So they don't have to go through this whole rigmarole. SUTA Dumping Prevention Act. So this is an act, it's intended to keep businesses from lowering their unemployment rates in order to bring down their taxes, really. So instead of So companies, there are some companies fraudulently who have terminated their operations, gone out and formed a new company. Maybe they had a high unemployment tax rate because they had a lot of employees that had filed for unemployment benefits. They terminate the company, and then they start a brand new company doing the exact same thing so that they can get that introductory contribution rate. So there is a law against doing that. Or from transferring old companies or previous employees to a new company in order to avoid tax. That's a tax evasion. That's illegal. So, let's see. All right. Let's talk a little bit about this Form 940. So we talked about the 941, which is filed on a quarterly basis. Federal unemployment tax the report is filed on an annual basis. It is due by January 31st for the entire 12 months of the previous year. So 2023, the FUTA form is going to be due on January 31st of 2024. So again, employers have a month to get that information together. So that is the form. Just like with the 941 though, we may have a different deadline for making actual payments. So once an employer reaches a FUTA liability of $500 during the year, once they reach that mark, then they have to start making payments on a quarterly basis into the FUTA system. So as you can tell, like if we have a taxable payroll, let's see, say for quarter one, we have taxable payroll of $10,000, and then for quarter two, $20,000. Quarter three, we'll make this easy, $30,000, and quarter four, we paid some bonuses as well, $50,000. So if our FUTA rate is we don't have any credit reduction, then our FUTA rate is 0.6%, right? The amount that is due each quarter, so we have $60 due. on the first quarter, we don't have to make that payment yet. There's no amount that we have to pay at this point. Second quarter, 20,000, that would be $120, right? So our cumulative would be 180. That would, again, second quarter, we wouldn't have to pay anything. Third quarter, we have $30,000 of taxable wages, so 180. Our cumulative amount, 360. We still don't have to pay anything. We've accumulated that liability, but we don't have to actually make a payment. In the fourth quarter, 300. So 660. We would make that payment when we file the 940. We'd make that payment. Now, if, however, let's say we had, this was 100,000. And so, well, that's too much. Let's say this was 50,000. And everything else remained the same. So, 300. First quarter, we don't have to make any payment because we're not up to $500 yet, right? Second quarter, $420 total. We still don't have to make a payment. Third quarter, however, now we're up to 600. We have to pay that because we've reached the $500 mark, okay? The next quarter, so this 600 would be paid. The next quarter, so we would pay this. The next quarter of $300, that's going to be paid. The remaining amount is going to be paid with the 940. Now it could be that we reach every single quarter, we're over 500. So if that is the case, we're going to have to make payments every quarter. So 100,000, we've got 600. So 600 paid. Again, 600. Now we're going to pay 600. And so on and so forth. Okay, once we reach $500 of liability for the year, then we have to pay every quarter. Again, the more you owe the IRS money, the faster they want their money. Let's see. So so the Form 940, which we're going to take a peek at here. Actually, do we have it in the slides? I want to go back to the. I'm going to go back to the problems. There we go. We'll just take a look at this problem. This is a multi-state form. This is what the 940 looks like. So this is Runson Moving Company, annual 940, and a Schedule A. So I didn't talk quite yet about a Schedule A. Schedule A is if there is a multi-state company, you owe more than one state, then you have to fill out this Schedule A because you've got to indicate how much in wages you had for each of those states. Okay, what the taxable wages were. Also, if you are you would have to fill this out if you are in a state that has a credit reduction. So if you're not getting that most beneficial 0.6% tax rate, you'd have to fill out the Schedule A as well. So let's look at this. We got Runson Moving Company. This is for, which quarter is this? Oh, this is the 940. So this is none of these. So you don't have to put anything there. All right. So, and they don't want anything filled out in Part 1. This would be filled out, this part, they filled it out for you. If you had to pay state unemployment tax in more than one state, you're a multi-state employer, check here and complete Schedule A. If you paid wages in a state that is subject to a credit reduction, check here, you're gonna have to complete Schedule A. Okay, those are already checked for this particular problem. So first line, part 2, or actually it's line 3, they want the total wages paid to all employees. So everything that was paid. Total payments, $121,480. Okay, so this is total payments. We're going to subtract though those payments to the 401k plan of $34.40. I don't think there's any other pre-tax. Oh, actually, we're not going to subtract it at this point. $121,480. We're going to subtract it at another point. Okay, payments exempt from FUTA tax. These would be retirement and pension payments. Okay, which were $34.40. Total amount of payments made to each employee that exceeded $7,000. You can imagine we're going to subtract that from our total here. So payments made to employees in excess of $7,000 totaled $37,030. Subtotal. Line 4 plus line 5. So 40,470. Taxable FUTA wages, line 3 minus line 7. So this is we're pulling that amount out. It's not subject to taxation. So 81,010. FUTA tax, multiply it by 0.006. $486.06. And this is fine, right? It's under 500, so we haven't had to pay anything during the year. Because our total for the year is under 500. Now, let's see. All taxable FUTA wages you paid. See, determine your adjustments. If all of the taxable FUTA wages you paid were excluded from state unemployment tax, so we had California. Is California, I think California is subject to, let's see here. Trying to see if it's subject to a credit reduction, if they give us any hints on that. Yeah, so California is a credit, I think California is a credit reduction state. Did it give us? No. All right, well, let's just assume that it's not. We're going to go down to, we'll get back to, well, we can fill this part out. So part 5, I'm going to skip down to part 5 right now. The amount that was due in the first quarter, they've just given us these amounts up here. So $218.70, that's right up here. $218.70. Second quarter, $106.20. $103.58.16. That should equal it. $486.06. So just like with the 941, we needed the total tax to equal the amount for each of the months or each of the pay periods if we had a Schedule B. Same thing here. So this 486.06 needs to match this amount, and they say that there. Or actually, so line 12 when we get through this. So if all of the taxable food and wages you paid were excluded from state unemployment tax, nope. So, do they want a 0 here? If some were excluded, nope. If a credit reduction applies, let's see if it does anything here. Where's the check mark? Oh, so that is a 0. What are these first quarter? Oh, these were the deposits, sorry. Is it? Oh, it is, I'm sorry. We're over time. All right, so we can continue looking at the, I'll take a look at that. Looking at the, how to fill this out as well next Tuesday. And that pretty much wraps up this chapter anyway, so we can play around with this a little bit more as well. Okay, so California has a credit reduction. Is it giving us what the credit reduction is for California?
Thank you.
You're welcome. Have a good weekend.
Two.
So. Trying to see how they tell you if there's a credit reduction.
I have a question.
Mm-hmm.
So, possible job chatting. I was just working on an email for Gina.
Uh-huh.
So is she the one I talked to about like targeting her, or would I talk to her about job chat with someone else?
You would talk to her about
Job chat.
Job chat. Yep.
Okay.
Yep.
Okay.
She's the one. Yep, you bet.